Good morning, it's Friday the 2nd of February, and a lot of these altcoins, not the ones, I'm not talking about the ones that have peaked and are easing off, but a lot of them that are in kind of really nice corrective patterns, looking really constructive for more upside. But we'll start with Bitcoin. So yesterday when we looked at Bitcoin, we were down at 42,000 after a really nice three-wave correction and a back test of this 42,200. This big 50% pivot level. This big 50% pivot level comes from the high that we made in November 2021 and the low we made in November 2022. And they can be kind of funny levels, when you're above them, there's support, underneath them, resistance, and so on. So here on the 4-hour, we had a really nice 4-hour buy set up, and we said the main target would be this 43,400 and these previous highs, which would be a 786 retrace. Let's go down to an hourly. From this high to the low, this is a 786 fib. And when you do this three-wave pattern, that's the most common retrace, if you like. If this is going to be, if we're going to fail and have a bigger pullback, that's likely where it's going to happen. So that's around 43,500 in Bitcoin. And so here off the lows, what we would really like to see here is another fifth wave. So we've got 1, 2, 3, we're going sideways in a wave 4. I'd like to see one more swing higher and tackle this 43,500 and see if we can break out beyond it. But it may be, you know how things go quiet as you go into the weekend. It may be that we end up at this level, 786, and we do a three-wave pullback here before we continue higher. So that's what I'm looking for today. It looks like another push higher then. For Bitcoin, short-term trading, same thing here. In ETH, we were looking for a bounce off the lows to recover these hourly moving averages. We've gotten it. We've gotten it here also in the 4-hour chart. ETH is lagging. It's underperforming Bitcoin, but a high tide floats all the boats, and pretty much a lot of stuff in crypto is looking really quite interesting this morning. So I've had a request to look at ICP. First off, let's zoom out and look at this, because it's doing that 50% thing short term. First off, what I have to say, when I see it from the low that we made in September, is really nice 5 waves up and flipped our weekly moving averages really strongly. There's loads to like about this. And I also like the price action since then. We have gone sideways. Normally, when you look at a wave after 5 waves up, you would normally look back to the bottom of this wave 4 to be support for the next leg higher. We haven't got there yet, but it is looking pretty interesting. So what we have done here is 3 waves back. So the key question is always, is this the end of the correction and now we're in a new upswing? Because when you make corrections like this, 3-wave corrections, sometimes they can be the bottom and sometimes they can just be the first part of a bigger 3-wave correction before you go again. And so what we need to watch here for in ICP, that's not the case. And so we need to make sure that this doesn't turn into a bigger topping pattern. So there's a few kind of ways we can look at this. Is this, where would the trouble be? Well, an equal measured move from this low, which would be 1472. Sorry, a bit lower here. Another way I would say is I put my fibs on from the high to low when you have a correction like this, and I look at it like a step ladder. We have to climb level to level to level, and look, that's where the 786 fib is, 1486 to 1472 to 1486. So that's where we're likely to have trouble, and if we reverse there, we could see that bigger ABC. So what would the reversal look like? Well, when you reverse to the 786, your support is the 382. So clearly we could say underneath that would be a bigger leg lower. We could also say, this is the other rule that I like to apply to corrections. If we measure from low to high here, underneath the 61.8 means we're back down here. So I would say 1344 would mean probably that we are in a bigger pattern. So between those I would look for support at 1344, and then underneath this back test of a 38.2, or back underneath these daily moving averages, we're going to do a bigger ABC, and the place we're going to pull back to is 8.5, and this swing low most likely. So yeah, all you can do, because this could be the correction over, all you can do is buy a little, see if we get up here. If we then break higher, buy more on pullbacks. Or you don't have to stagger your way in, but if you go all in, watch it really carefully. Maybe take some partial profit here if it starts looking like it's going to wobble and not keep going, and so on. So you need to kind of plan to manage it until we get free and clear and new highs. Okay, so what do I mean by everything else looking quite well? Yesterday I posted in the group, and for subscribe, here's the Chainlink. So we had been watching this as a bullish flag here in Chainlink. Very similar, isn't it? Looking to what we're just looking at in ICP. Here down on the daily, though, I feel like we're kind of, we could have argued that this was three ways, but this is really clear when you can draw it as a channel. I know this is a channel because we tested this third wave very nicely, and here we have a breakout and we are now at new highs. So the key thing for me is that this isn't a funky looking ABC or equal measured move here. We need to move beyond that. 17.5. So I'm going to say that back underneath 15.9 means that this is a failed false breakout. And I'm going to give up on my plan. So, when I initially bought this, I had my stop down here. I haven't moved it up yet, but this is where probably I'm going to wait until the end of today and then move it up under here, because that would be a false breakout. What you want to see when a market makes new highs or breaks out from a consolidation range is that everybody notices and jumps in. Not, when it just gets up here and goes sideways, it's always a little bit of a concern that it's not going to keep going. So Chainlink, where are the targets next then? 23.28 and 28.95 next. Again, don't buy the highs, don't buy the spike, buy pullbacks. And that's this on a lower time frame. This is what they look like. A very nice three-wave correction. Pull back to the moving averages. That is textbook. Here, from this low, look, we've made 5 waves up almost. Now sometimes, these wave 5s can extend. So you think you've made a wave 5 and actually it's just one of 5 and it'll suddenly take off. But an ideal, if you're stalking this for a pullback, then the ideal would be 3 waves back to this swing low, back into these moving averages, momentum reset, and turn higher again. So that's what I tend to look for. And a really simple way to do it is to use high Kanashi candles, which are like a moving average on candles. Need to see some nice red turn green again, and it's a really good signal. It works great on higher time frames too. Now, the problem with trend trading is, well, people always say this to me, oh, but you didn't quite buy the low. Like, it's not like you didn't. That's not how trend trading works. You kind of need the trend before you can trade it. You can't, otherwise you're just betting on turns. So you aren't always going to get the perfect low, and you're not always going to get the perfect high, but you're going to get pretty profitable trades that work. Okay, so what I mean by everything else looking pretty good. So Sui has won. I think Sui's in a little bit of a pullback, but a lot of these charts that I like looking at that are looking pretty tempting as making bottoms. If we look at Avax here, this is a daily chart. Again, this is another altcoin where you look at it and think, have we made a very nice 3-wave pullback, or are we just gonna, make another 3 waves and a bigger pullback here? The question is, I don't know. It's a little bit concerning being underneath this daily 50. Quite often that will be quite tough resistance. So for me, that 37.7 level is the first place we're going to have a little bit of trouble. And if we just make an equal measured move here and then turn lower, it's likely to be another swing. But you know, they're all having a go, and that's what I really like to see. On the weekly, this is a lovely look. You know, we pulled back to the weekly 20 moving average and we're turning up higher again. And when we do trend, this is exactly what it looks like. A pull back to this 20 moving average and take off. So, oops, I've messed that up. Hold on. So, yeah, quite a few looking quite interesting. Let's take a look at some of the others. For example, this is one that I've been following, OpenFi. Now, on the daily, this is a pretty nasty, tricky range, but so far these daily moving averages, which are pretty newly printed, have been working. Now, from this low that we made on the 11th of January, we made a very nice three-wave rally, equal measured moves. So this is where we pulled back, and this is what I mean about this back test of the 61.8 needs to hold. To me, this is looking like very nice three-wave correction, and we could turn higher here. So if you, I'm watching this at this point though, I would really like to see it above this 0.24 level. And if we look at this on the weekly, then I think that we're going to look at a bigger kind of three-wave swing. We're going to go from this low, if we go beyond there, to this high. And then we can say if we can break out here, our first target will be 0.28. And then our second target will be the equal measured move from this low at 0.384. I like how we're holding above these daily moving averages. So that's where we're going to be wrong if we end up back underneath them in OpenFi. Okay, good luck. Let me know if there's anything you'd like me to look at.